Welcome to SobelCo Insights. In this session, we will be discussing the financial services industry. Hi, my name is Brad Muniz. I'm the partner in charge of the insurance practice at SobelCo. With me today is Joe Zapf, manager in the financial services practice. So Joe, we handle a lot of different industries here at SobelCo. We handle supermarkets, we handle a lot of nonprofits. I can think of a lot of different industries, real estate, manufacturing, and I hear financial services a lot. Okay, what generally constitutes or what creates a type of company that falls into financial services?
Yeah, so financial services is such a broad area. It encompasses so many different types of clients, ranging from broker-dealers to hedge funds to private equity companies to companies that specialize in mergers and acquisitions. It's such a broad area, but then each of those niches within financial services has its own requirements as well. Different audit requirements, different services that they need from our firm.
So it sounds like a lot of people that are handling other people's money, okay, or investing in different ways.
Yep.
I know that there's a company referred to them as an alternative practice. I don't know why it was considered alt practice, but they literally said alt practice, and I didn't know what that was. We don't handle any fintech. I didn't hear you say.
Yeah, we don't handle any fintech, but primarily one of our biggest areas is brokers and dealers, and there's a difference. Broker dealers, you tend to refer to them as combined as broker dealers or brokers, which trade on behalf of clients, or dealers which trade for their own account. They have to register with Finra and the SEC, and they're required to have an annual audit. So that's one of our larger areas. Hedge funds is one of the bigger areas that we help clients in that space.
We'll talk about broker dealers in a second more, because I have a question about them. You just mentioned them needing an audit. I want to ask about that, but generally, let's talk about the financial services industry in totality. Obviously, or not obviously, I don't want to say obviously, but most companies there, I'm sure if not all of them, require some sort of tax service.
Yep.
Unless they're a disregarded entity, and then it's the parent that needs the tax service.
Yep.
But for the most part, they need tax services. Other than tax services, what type of services do they look to us for? Do they need? We have somebody that's starting up a financial services company,
Yep.
a hedge fund, broker-dealer. What should they anticipate they're going to need?
Yeah, so there's so many. First, they have to register, obviously, with a ton of regulatory bodies. This is one of the most highly regulated industries that we deal with. There's so many regulatory authorities, from Finra, the SEC, the PCAOB, as a lot of these audits fall under public company standards on the audit side. And then there's also a ton of advisory services. We've been getting a lot into cybersecurity advisory lately, and there's general business advice, tax consulting.
The one that I've heard, and you hadn't mentioned as financial service, I want to make sure it falls in there because I know you handle it actually. Money remitters.
Yep.
So we don't handle Western Union. They called us, but we said no, we don't want to do that. No, we don't handle the Western Union because of how big they are. But money remitter is a company that falls into the Western Union type of realm, where you're sending money from one location to another.
Yep.
Like the precursor, I guess, to Venmo. But
Yep.
we're not talking about Venmo now. So you handle actually money remitters. They fall in financial services.
And they would fall in financial services as well, and they need completely different requirements than some of the typical financial service clients that you would think of that are primarily investment type companies. They have their own requirements with the state banking departments and banking authorities.
So not only you mentioned PCAOB, or you mentioned SEC, so now you also have state banking
requirements. Yep. So it's one of the most highly regulated industries that's out there. And from our point of view, we have to be on top of all the different regulatory bodies and help our clients navigate that strict regulatory environment.
Now, the banking, I'm going to talk about the audits again a little bit more, but so the SEC, PCAOB, they put out audit requirements and some accounting requirements too.
Yeah.
Not PCAOB as much. State regulatory bodies, they don't put out accounting and auditing requirements, do they?
No.
Okay, just wanted to make sure of that. You made me nervous for a second. If I was missing something.
No, we don't need to deal with the New York State or New Jersey regulations on top of everything else.
Now, I know that talking about money remitters and the banking authorities, in the same way with broker-dealers as the money remitters, broker-dealers generally have to carry what's called a net capital requirement, right?
Yeah.
That's where the SEC is looking at it, or it's not the SEC, but we'll talk about other organizations later, are looking at it and saying they have enough capital to continue going on. They have to have certain thresholds.
Yeah, net capital in the broker-dealer area is one of the most important calculations, and that's really what it is. It's a calculation of liquid net worth for a broker-dealer, and it's the biggest benchmark in that industry is their liquid net worth calculation, which is referred to as net capital.
And I imagine that the reason they're doing this is the SEC's responsibility is to protect the investor in some way. They're not there to protect the company. We're the auditor, they're looking to us, they're not to protect the company either. We're almost acting as their adjunct.
Yeah, and with a calculation like liquid net worth, they want to make sure that in the event the company is able to survive, and that if they were to go bankrupt or fall under, they have enough capital and enough liquid net worth to protect their investors.
Right, okay. So similarly with money remitters, my understanding is that they have capital requirements too.
Yeah, they do.
To get I think they have to get licensed by each state.
In order to start up, they have a certain capital requirement. Yeah, every state is different. New Jersey might have a different requirement than New York, but in order to be able to, or be responsible as a company of transferring people's money, you need to have a certain level of equity on hand as well.
Right.
And you need a certain amount of liquid cash as well.
And I know that you were part of a situation where the client wanted to manufacture that information one time.
We had a story with a client that was trying to get their money remitter license in, I believe it was the state of New York, but it could have been New Jersey. And they were trying to hit a certain threshold of equity, and they were doing things that was not okay, and we didn't allow that to go through. I think we dropped them as a client because of that. But again, it goes to the highly regulated environment. There's reasons these regulations are in place. And we, as an audit firm, we couldn't allow a company that didn't meet that equity requirement to get approved. It just was not going to be okay.
And as you said, they fall into the banking requirements. Now, we don't do any savings loans, any banks. You would constitute a regular bank, which falls under the banking requirements, and that also falls under financial services industry, which I know the firms work with.
Yep.
Now, going back to the broker-dealers, I know PCOB calls them broker and dealers or broker or dealers, but putting that aside for a second, you said that they fall under public company or SEC guidelines.
Yep.
Are the audits a lot different for broker dealers, even compared to money remitters that you mentioned, or compared to hedge funds?
Yes, they are. Yeah, they are, and they are for a few reasons. Number one, like you said, they fall under public company standards and the guidance of the PCAOB, which is like any other public company out there. That does a few things. Any of the new standards, for example, like the lease standard, which came out a few years ago, the broker-dealers had to adopt it. Even though they were private companies, they had to adopt it under the public company timelines, which was 2 years earlier. And then it also was different independence requirements. For example, we can't do the financial statements like we're allowed to prepare financial statements for a private company as a non-attest service, where there's very strict regulations around that for public companies, which again, the broker-dealers fall under these public company guidelines. So that's just one example of the regulations that they're bound by. Then there's also SEC rules, Finra rules, SIPC rules. There's a multitude of different regulatory bodies out there that govern these financial service clients.
So, I mean, I handled public companies years ago. You look at me and all you see is old guy. I know what you think. And we helped the clients a lot then. Public companies have an MD&A, management discussion analysis, and we help them craft a lot of that verbiage. And it seems to have changed now where, as you said, we can't prepare the financials. What are we allowed to do? I mean, 90% of our clients, we're helping them prepare the financials under, you said, the non-attest, provided they take responsibility, have a person that's identified, blah, 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 blah. This isn't a non-attest section, but that's for 90% of our clients. But for the broker-dealers, and hedge funds, I know we've helped prepare, but the broker-dealers, we can't help them prepare those financials.
Now, from an audit side, as CPAs and an audit firm, we're very limited on what we can do, and we can only get their numbers and audit their financial statements. We can't prepare the financial statements, we can't prepare the footnotes, we can't even go as far as print a copy of the financials because it's considered to impair our independence.
It's considered a management function that we're doing.
It's considered a management function.
Binding financials. I know Brittany is very happy that she doesn't have to bind more financials. So, Okay, so she's saying, yay, go SEC and PCAOB. All right, so there's a lot more limitations. As you said, I mean, there are a lot of rules, the SEC rules, you know, the SEC Act of this, the SEC Act of that.
Mm-hmm.
There's a lot that they fall under. And one other one that you said, or two other ones that you said, it was kind of a new acronym you dropped on us, was Finra
Yep.
and SIPC.
Yeah.
And now...
And again, these are two regulatory bodies that are primarily related to the broker-dealer audits that we do, and it's two organizations that broker-dealers have to register with FINRA, and they have to pay annual fees to SIPC, which is the Securities Investors Protection Corporation. And again, they're designed to protect the investors and protect customers. And the broker-dealers fall under their regulations and their guidance, and of course have to pay them fees associated with that.
I heard something very interesting one day at a PCAOB session. There was somebody speaking from SIPC. I think you may have been with me at the table that day, and we were both looking down, probably playing a game on our phones or something, and the woman said it, and we both went like this, and the woman said, if a broker-dealer goes bankrupt, and your audit opinion did not have a going concern or notation about the going concern, we will come after the auditors.
Yep, I believe it. Yeah, it's and again, it's such a strict regulatory environment, and that's, as auditors, that's one of the things we can help our client with is navigate this strict regulatory environment. Yes, we're bound by independence requirements, and we have to meet those standards. But in addition to that, where we can add value to our clients is providing an easy way to navigate these different deadlines and requirements and understand the requirements exactly.
And we're not making management decisions, but if they wanted to bounce something off us based on your experience of what you've seen, what you've read, and what you're involved in, they're able to at least discuss it
and
with
seeing
you.
examples from other clients that have to deal with these same issues. Yeah.
And you're saying here for the record, you're not taking any management positions in anything.
No management responsibility.
Okay.
Yes.
And then lastly, you had mentioned hedge funds, and I had forgotten that hedge funds fall into here. And they're mysterious, and unfortunately I've been hearing a lot lately that the SEC, if you haven't reading about this, the SEC is going to start going after hedge funds more because they want more reporting. Now right now a lot of hedge funds have audits, right?
Yep. A lot of hedge funds have audits for different reasons, and some of it could be as simple as they need the numbers to be accurate to give K1s to the investors. Going forward, it sounds like there's going to be more regulations coming out where these hedge funds are going to have required audits outside of just tax purposes. And then you look at a hedge fund, and their number one driver responsibility is their investors. And meeting the demands of a hedge fund as a client could be as simple as meeting their deadline to get their investors their tax information on time.
And one of the big things in the hedge funds is the management fee.
Yes.
And for the general partner or general manager, they get a management fee, and somebody needs to verify or give comfort that the management fee is calculated properly.
Yep. And that's how hedge funds are primarily making their money. There's all different structures. We generally don't give advice on how they set their structures, but we do calculate and make sure that if they decide on a structure that's applied consistently, we test the fee and how it's calculated. That's typically a part of the audit.
So they're tough enough alone, hedge funds.
Yeah.
You have investors coming in, going out type of thing, and now all of a sudden, and the management fee calculation, incentive fee calculation, that's tough in and of itself. Now if they're going to overlay the SEC requirements on this.
It could be even more confusing, yeah.
Wow. Okay. Well, those are the questions I had, and I actually asked more than I had initially expected. So, Joe, I want to thank you for joining us today.
Yeah.
And I look forward to you joining us again in the future.
Yeah. Thanks for having me.